Alright, welcome back, guys. This is Success Joe on the chat, and I'm trying to go around and trying to backtest and see how to what you have to expect, and also to refine my edge. And so, this is GBPUSD, Great Britain Pound USD on the daily time frame, and trying to backtest, refine my edge, and also check out what I have to anticipate for the next day. Okay, so let's begin. Alright, so watching from previous days, let's mark out some drawn liquidities that we were to target, and also based on my strategy, which I'm working with the opening day or new day models by the MMN trader, which was refined by T Trades, and so the MXMM trader, which was refined by T Trades, and so let's go. Alright, as of this day, we had this push here. But before then, I already have this as a draw liquidity. That's for me within this range. That's an external liquidity for me, which I'll call this the ones inside the range and internal liquidity. So market flows from internal liquidity to external liquidity, and I'm certain you know that. So I'll just mark out my range, is from here. Alright, so after marking that out, I also have we will continue from here. I have this external liquidity, these two of them, then within it are internal liquidities inside the range. And so today was Tuesday, and this is Wednesday's candle, and so market closes above this, and I'm actually trying to target this opposing liquidity at the top. So I'll just use my rectangle to know these spots. Then I'll go to the lower time frame. I'll go as low as 1 hour time frame, then to see how it works. And alright, from here, what did you see? Okay, I see the sweep. This sweep below here, and if you should look below, or what did you see that actually make price to reject from here? You see this, the fair value gap, so that's where price rejected from. In all contrast to it, another block, but I'm not using other block for my entry criteria, so I won't mention that out, just fair value gaps. And so within here, you're going to go to the lower time frame to look for entries that will actually help us go as low as taking this high. We already know this is our external liquidity high, but to be realistic and trading intradays, you have to look for realistic entries, and which one of them is going to be this equal highs up here, both here. So going down to the lower time frame, I'll check the 15 minutes at first to see. Alright, checking the 15 minutes. Checking the 15 minutes. After this market hitting on the fair value gap, we have a rally up. So for me, I'll get this as my market structure shift, which did here. So now these are the fair value gaps I would love to use. So let me turn on my fair value gap indicator, and you see it will notify here, since this is past price data. And so you see this fair value gap price just went down a bit deep into it, but it wasn't really visible for someone to take an entry from the consequent encroachment of the fair value gap. So if it were to be me, I would actually still start since it didn't get to the consequent encroachment, or my entry might be where I drew this line. So price won't tag me if I had to do that. So what happened? I waited for another expansion, and after the expansion, next expansion was this. No fair value gap. Like I told you, I'm working with fair value gaps. So after that, price rallied. I'll have to go to the lower time frame to check it out. Alright, so let's go to 5 minutes to check it out. If probably, alright, you can see the fair value gap has been outlined there. For the 5 minutes, let's see, because sometimes the fair value gap doesn't just occur in the 15 minutes time frame. You have to dive in deeper. So you can see diving in deeper, this was the fair value gap which price reacted from, but the 15 minutes time frame it didn't show that. So outside that, let's go on. Price did no fair value gap here to support the expansion. So the next break of structure that occurred was this, and I will probably take this one because what I can see the fair value gap that formed here. Yeah, so what I'll do is take my trade from here. I'm always targeting 1:3. So if my stop loss be below this zone, because this zone is now a projected low, and targeting 1:3. Alright, that'll be my realistic target, 1:3. Now I know this is the target we're actually looking at, but that doesn't actually concern me. That doesn't concern me. This is what I'm actually looking for. You understand? That's what I'm looking for. And yeah, I don't need to go target something else. So that was a win trade. On to the next, or we could actually find a continuation towards our objective target, which is this top, the external liquidity. So we've gotten this within the range of this. So price took out this and consolidated. So going to the next day, let's go back to the daily time frame. Alright, so back to the daily time frame. This was the day. Yeah. So this is the daily time frame, and I think which day is Thursday. So on Thursday, go back to 1 hour time frame to check it out. What occurred on Thursday. So let's check it out. This is Thursday, and I'm actually expecting this high to be taken. You understand? So also you have to watch with the price. I always come on the charts during New York time. So checking it out. This is the sweep I'm actually waiting for. So not seeing actually no sweep yet. So price just went up and dropped down. After this massive pullback, which day is this? Friday, and I'll be expecting this external liquidity to be taken. So but it hasn't been taken yet, so that's still my drawn liquidity. And so if I should mark out my fib zone to this expansion, I have my 61% fib zone to be this, and it is in contrast with what? A fair value gap. So that gives me more understanding and more sync to my buyers, and also to find an entry at the zone to take out this liquidity right here. So going down to the 15 minutes time frame, like I always do. 15 minutes time frame. Alright, going from here. This is it. exactly the same thing that occurred, no favorable gap here. So I'll go down to the 5 minutes time frame to see if I can find one. Okay, so let the data show so I can see it. All right. So for the 5 minutes time frame, what happened? After we have a break of structure on the 5 minutes time frame, and remember that's the high we're targeting, and so from here we have a break of structure, but it's switch up around here. I see no fair value gaps that I could take. At some point, I might actually want to go down to the whereas let me just enlighten you that this is the high I want to see price break before I looked for a fair value gap. So for this, I have not seen any fair value gap or I've seen this. Let me see this. After this price expansion, yeah, this is the candle that took price that broke price above. So probably I wanted to see like maybe a candle that just gets into this fair value gap here, but no candle got in. It's just expanding and expanded. Yeah. So after expanding, this deep retracement here, I won't want to take it because I have to see price sweep above this. So price swept. After price swept, unfortunately, this is what I couldn't find no entry on Friday that matches my entry criteria. But if I was to be aggressive, I'll be taking entries, knowing that it was going to buy after the reaching the 61% Fibonacci level. So, but since it didn't, I just have to leave it there and just focus on this. So no entry on Friday, and we go over to the next week, which is Monday. I will see Monday, nothing really. I don't actually trade on Monday, so nothing really enticing, and eventually we got the high taken. So you can see really got one entry from this. But if it's to be an aggressive trader, not really aggressive, you actually matched your criteria, you would have taken the trade from here. But actually trying to maintain all sense of discipline, I didn't see the fair value gap. But if I was to take using another block, breaker block, and the rest of them, I would have seen an entry and just rolled it up. Yeah, so down from here. After the liquidity got taken out, what do we still have now to take out? The sell side. So market's actually moving from buy side liquidity to sell side liquidity. So we've seen numerous break of structures from here, and it's quite simple that there's actually fair value gaps that support price. And so if you were to take from here, we have this fair value gap at supported price. So that was a very miniature touch, but if you were to keep that, you will see going. Place your stop loss above this level, or at the level targeting what? Realistic targets, remember, just 1:3, and that's 1:3. Then if you are willing to hold to the external range liquidity, that's gonna be a long move. That's like close to 15 hour, or that's 15 hour as a whole. So that's a very massive drop, and you just keep holding it that way. But for us, we're actually targeting 1:3, so let's maintain that level 1:3. And so Tuesday had to do its thing, and like I said, I'm back testing, so I'll definitely check Tuesday out to see what happened. And so we know you're still going to be bullish again, so let's go back to the 1 Let me check the 1 hour time frame to see frame and electron liquidity to take care of price to take out. So after taking this out, price is still in a correction phase to fill this liquidity void. So that is a sell side imbalance, buy side inefficiency. Yeah, so that's a large revealing gap, and we're actually anticipating price to reach the consequent encouragement of that. That will be my significant target. So you can actually see it from here. Break of structure from the 1 hour time frame. The retracement to the FVG and price rallied, but hasn't gotten there. So Wednesday. Today's what? Let's check it out. Oh, today's Wednesday. My bad. So Thursday might actually be a bit bullish, yeah, for me, but I've not really confirmed the bias. We're just gonna see how it works through this consequent encouragement of this, and probably we get a sell off to some important key levels below if we can find any. Let me go to the 1 day time frame to see if I can find any. Okay, let's see. I don't think we can find any because price might actually just keep leveraging up. Okay, because we just surpassed the discount. We just fell into discount from this price, so price might just keep rallying. Whereas we have some liquidities like this, equal highs like this. This was taken already, so but realistically I'll be targeting this, yeah, if I was to take a trade there. So but that's it for it. I'm still back testing. Well, that's just some core knowledge you could give out and what actually rhymes with my entry. You can see I didn't actually want to force trades and I didn't force none. Just go to entries that's from last week and just this week. So in trading is less over how do we call it, quality over quantity. So less trade, more reward is better than more trades and less rewards. So until next time, I talk to you soon.